Well, good afternoon, Melissa. It's a new week and a new time, and I know that do the feds actually meet next week again, or is it November?
Not, no, they actually don't meet till November. So they meet
Okay,
November and December.
okay. So let's talk about what is happening in the financial arena in our world right now and how it's affecting the real estate market.
Okay, so we have actually seen mortgage rates go up since the Fed's 50 basis point, half a point rate cut, which is not what we wanted. And it just brings to mind like when you're dealing with interest rates, you literally do not know what's going to happen. And we had so many people under contract that could lock in before the rate dropped, so before the Fed met. Most of my borrowers did because we weren't sure if it was going to be a quarter or a half. We did think if it was a half rate, mortgage rates would probably drop a little bit, but that didn't even happen. So the people that didn't drop or didn't lock, expecting mortgage rates to continue to drop or drop even more, were really disappointed because they ended up with a higher interest rate. So it's one of those deals where you literally don't know. And then steadily since then, we've we've had one piece of good economic news after the other, which again, great for the economy, but not good for mortgages. So mortgage rates, that is. So the latest was last Friday with the jobs report. There were about 100,000 more jobs created than expected. There could be some seasonal adjustments that were made in there that might need to be backtracked, but for right now, it looks good. The economy looks healthy, much healthier than people, I think, feel like it is. But when you just look at the data, it's good. And the way people feel about it usually does lag behind the actual data. So it's good. Mortgage rates are up to about 6.5 for a conventional loan today from very, very low sixes. So but it is what it is. People are still out there buying homes, and it,
And that's a key piece on why it's important not to wait. I mean, I tell all of my clients and all my leads that my what is it?
it's a whole.
Yeah, is it has a crack in it. So I can't, it's broke. I can't tell you, I can't predict the future. So here's what happens is, you wait and you miss out on those lower 6%. Not to say that it won't go back, in the next couple of weeks or whatever, but
That's so true. I mean, we might have inflation data. We've got some inflation data at the end of this week. Maybe that's going to look really good, and rates might come down a little bit. But up or down a quarter point is not going to make a dramatic difference in the interest rate and what someone's paying on a monthly basis. So
are there still ways right now to buy down rates? I know for the last few years we've had the 3-2-2-1 buy down rates.
yes, so we are still doing the 2-1 and the 1 year or 1-1. And those are still getting done. Like a client put in an offer this weekend requesting a large enough seller credit to do a 2-1 buy down. Now they were doing an FHA loan, so the rate was in the mid fives, but that means for the first year the payment's based on a 3.5 interest rate, basically.
Crazy.
Two, 4.5, year three, and ongoing, unless they refinance, is about 5.5. So it's not a bad time to buy.
No, no, it's not, especially when you're talking, we can still get into those 3.5% interest rates with a buy down. Now, let me ask you this. I'm having so many conversations about the buyer's agent compensation. Are you seeing a lot of buyer's agent compensations having to be paid by buyers?
No,
Me either. Yeah,
no. I trying to think if I've seen any.
yeah.
I
I saw I have one, but it's because he bought last year and he's moving, relocating, and he only could give X amount of dollars. So what we did is we added a few $1,000s. When I say a few, like $3,000 onto the offer price and asked for that back in concessions, and everything was good. So that's the only one I've seen since August, since everything was implemented.
Yeah. I'm with you. Have not seen this being anything that is slowing buyers down at all.
Good, good. Okay. All right. Well, what else do we need to talk about really quick right now before the lawn people come over?
I just think homes are sitting on the market a little longer, right?
Yeah, they are. I think the average for the North Texas area is about 61 days, something like that, average. So that means there's some with less and there's some more than 61 days.
Okay.
Oh, yeah, it's definitely a lot longer. It's a, what we call a normal market. It's a pretty neutral market. Buyers can get good deals, sellers can still sell their homes. It's just taking longer.
And I've seen more, it's busier for buyers now than it was during the summer, especially during
Yes.
the second half of the summer. So I feel like there are enough buyers out there realizing that they can negotiate some pretty good terms right now. And it's nice to see them doing it as long as they can. So,
I agree. Yeah, I totally agree with you. So I mean, instead of waiting, who knows what's gonna happen if interest rates do come down, as we're seeing, as we saw the last few weeks, we had more buyers coming out. And as interest rates continue to slide down even slightly, it's gonna tickle people's fancy and they're gonna have fear of missing out and more buyers are gonna come out. So don't wait.
yeah, I agree. Don't wait.
Yeah. Okay, Melissa. Well, we will talk again next week. And in the meantime, hopefully nothing drastic happens to where interest rates, are hit again a little bit. Uh, and hopefully they come down again.
Definitely.
Yeah.
All right.
Okay, well, have a wonderful week. Thank
Thank
you.
you. You too.